All right, what up, everybody? This is Jeremy from Escape Velocity Trading coming at you for the Market Bias Update Report on Sunday, July 7th. Recapping last week's trading week, it was a shortened trading week with market closing early on Wednesday and being closed on Thursday for the July 4th holiday. I only ended up taking a couple of trades last week and ended up breaking even for the week, so no need to actually launch into the trade journal, but ended up basically being net zero for the week last week with scaled back positions and scaled back trading in general for the holiday week. So diving right into the week ahead, obviously starting off here on the S&P futures, we have just opened barely up for the session as of about an hour ago, and we are confirming a breakout on the S&P. Now, right now we have mixed signals in the market. We have an obvious bullish uptrend setting higher highs and higher lows. We have consolidation at the upper end of the range that is now breaking out. That is bullish. However, we are continuing to be overextended on the RSI, and our MACD is starting to slow it down a bit here. We also saw a little bit of decreased volume throughout last week, but that is to be expected for the holiday week where the markets was closed for a couple of days. So overall, I am leaning bullish, but a little bit more conservative as we work higher. Just my general trading philosophy is the higher we work off the lows, the more conservative in terms of my trading I tend to get. So I'm not overly bullish, but I am selectively bullish here. I'm not going to probably run out and jump into the S&P because I think the strength in the market is more focused on big tech and semiconductors starting to take charge once more. So breakout on S&P. If we do follow that thought up and go out to the Nasdaq, you can also see breaking out, very similar pattern on the Nasdaq, still overextended on the RSI, little bit of slowing momentum on the MACD, so basically the exact same picture. But if we go out and we look at our heat map from last week, now look where all the red is. All of our industrials, energy, utilities, basic materials, healthcare, any of our consumer discretionaries, consumer cyclicals like restaurants. And where is all of the green? All of the green is in communication services, in tech, specifically semiconductors and consumer electronics, and then sneakily down in finances. So those are going to be the areas that I'm looking for continued strength in the market. And we are seeing big time breakouts in multiple of the Mag 7. So looking at Microsoft, Apple, Amazon, Google, Nvidia, and yes, Tesla. Tesla is waking up from its slumber, and it actually had a 27% gain on the week. So Tesla coming back hard, obviously not chasing that price action, but we are going to be looking for secondary patterns within that area of the market, and then also looking at the big name tech stocks to start leading the charge for this next breakout to see if we can get some legs heading up to 21,000 on the Nasdaq and then likely beyond. Going out to Bitcoin. Bitcoin is continuing to struggle. We are at a very, very important price test, basically as we speak, right around 56 to 57,000. If that area breaks and we start moving lower once again, I am anticipating us coming down into around the 51 to 52,000 mark. I will honestly be surprised if we go underneath 50,000. I know that this is on a larger time frame, a big M or double top pattern. Right here you can see top 1 and top 2. The break below this middle pivot right here is considered a bearish reversal pattern. And usually when you have double tops like this and confirm lower, the depth of this double top pattern extrapolated to the downside is typically the depth of that reversal before you end up finding a bottom. So that would put us down into the low 40,000, somewhere around 42 to 43,000. I don't think we are going to actually break the 50 on the weekly time frame, which would come in right around 48,000. If we do get down into the low 50s to high 40s, I am going to be considering that an add, more for long-term positions. So just to clarify, not swing trading yet, because obviously for swing trading, we do not have a signal. But if we get into that zone right in here between 48,000 and like 51, 52,000, I am going to be considering that a long-term add and then continuing to scale in further if the price continues to drop, just building a longer-term position in Bitcoin. Going out to crude light, had monster move off the lows, big V-shape recovery, hesitated for a little while and are now pushing higher. We are in a little bit of a consolidation here. Honestly, I don't know how much more gas this has left in the tank because all of this sell-off here for the better part of basically April, May, June, and then leading into the first part of July, all of this, ever since we topped out at the highs, has been due to OPEC saying that they were going to remove the voluntary cuts for production, and that is not great for the supply and demand equation in the market. Market took that poorly, sold off pretty hard, and maybe was a little bit of an overreaction because we have popped back up viciously off the lows. Right now, I don't have a strong read to one side or the other. On the weekly chart, this does clean up a little bit, and you can see a little bit of potential here starting to form on the weekly chart, especially if we end up closing above our diagonal resistance line right there. So if we do end up getting back above, let's just say 84 and 40 cents, somewhere right in there, the scales do tilt back to the bulls from a technical perspective, but we don't really have a solid theme driving that. We always want to trade when we have not only a technical direction, but ideally when we have a technical direction combined with a theme that should drive prices one direction or the other. And with what OPEC has been doing lately, they've kind of removed the bullish theme behind oil of OPEC always has your back. They have always come to the market's aid. They have always come in to stabilize the supply and demand equation when prices have sold off. But this time they were actually the cause of the sell-off. And that's really honestly the first time in my lifetime as a trader, so at least the last 8.5 or so years, that has been the case. So I'm a little hesitant in the oil space for anything more than day trading as of now. I do think that we are probably likely to come back up and knock against this long-term diagonal resistance again. But I wouldn't really be surprised anywhere between about 84.50 and down to about $80.50. So we have about a $4 window here on oil that I am not going to be surprised one way or the other on. We are overextended a little bit on the daily chart, and we do have a MACD that is starting to threaten a little bit of a cross here. Even though we are in bullish territory above the zero line, a cross of the shorter term MACD line over the signal line is not particularly great. So anyways, might signal that we might have either a little bit more consolidation here or potentially a pullback coming. So again, looking for day trades in this area, but probably nothing more than that for the time being. Going out to gold. Gold has woken up. We took several weeks off here at the lows, really trying to fight for support at the 2,300 mark. Held it, got back above all the moving averages, and really I don't see any reason that we shouldn't be ideally looking for a target back up to around 2450. We are at a short-term kind of intermediate resistance zone right here. We did ding that pretty significantly a few weeks back, led to a large sell-off. We will see if we can hold here. We have started today's session a little bit lower. I would not mind seeing 1 or 2 candles of just very controlled price action, either flagging down and letting this green 9 EMA work its way up and act as support around 2375, and then seeing a breakout of 2400 pushing up to 2450. Or conversely, just seeing a couple of candles really tight here underneath 2400 with a breakout confirming just above this big momentum green candle here that was at 2401 and 50 cents. So anything above that, I think you got to be triggering to the upside. But right now we do need ideally a couple of days of consolidation at least here, so we know where to put a stop loss if we do decide to trigger into that trade. Going out to copper. Copper fighting the good fight, back above all of its moving averages. Again, kind of rinse and repeat similar to gold. I would love to see 1 or 2 days of consolidation here to really solidify prices above the 50 period SMA, which is currently at 4.62. If we can hold that level for a couple of days and then trigger above the high of this previous candle, that would be go time for the bulls. It would also get us back above the resistance from this previous shoulder over here. So I like the look of that. And then if we toss this out to a weekly chart, we can see that this would actually be just a standard bullish retracement, even though there is a lot of volatility here to the downside, and it looks like a pretty big volatile move. If we put a drawing tool to this and use our Fibonacci retracement tool, we will see that we basically just came in right around the 50% Fibonacci retracement, which is a standard bullish retracement. So again, if we do trigger back above this candle high, I think that is a signal for the bulls. And then we are just trying to figure out where can we put our stop loss to get a risk to reward that we feel comfortable with. Honestly, it probably won't get there in one go, but I am expecting that we are going to break back above $5 and probably push back into the highs of $5.20 here before too terribly long. So I'm keeping copper on my radar. Going out to natural gas. Natural gas had a nice trend line for its bullish run. That broke. We consolidated for a little while. Wrong drawing tool. Consolidated for a little while, broke down, and this actually looks to me like a head and shoulders patterns. We have the left shoulder here, head poking up, right shoulder right here, trying to reclaim moving averages and failed. And now we've officially broken down below the neckline and a cluster of really important moving averages here. This needs some time to work itself out and straighten itself out on the daily chart. It is overextended on the RSI. Makes me think that we might see prices try to pop back up into this decreasing 200 period moving average, which is somewhere right around $2.47. If we toss that out to a weekly chart, just to gain a little bit of clarity from a longer term perspective, we do have some support from a curling up 20 SMA right underneath us at around $2.20, so about 10 cents lower than we are now. I wouldn't be shocked to see prices hold that level. So really we have kind of a pocket between $2.20 and $2.47 that I'm not super interested in doing a whole heck of a lot. If we do get back above the 50 period on the weekly chart, which is currently at 249 and change, let's just call that 250. I am going to be interested in playing another round to the upside for that. So I'm actually going to set an alert for that, go back to our daily chart and just look to see where that falls in terms of our moving averages. That would put us back above our 200 period moving average and just shy of the 50 period moving average. So it might take a little bit more work depending on the consolidation pattern that we got for that, but a breakout back above the daily 50, weekly 50 combo on natural gas, I might be interested in, depending on how the pattern shapes up at that point. But right now, it needs some work, so it's not really on our radar for the next few days or next week. Going out to Palladium. Palladium on the daily chart just looks kind of like a little bit of a mess here. It is overextended on the daily. If we toss this out to a weekly, though, I am starting to really like the bottoming pattern here. We have gotten the lows around 850 to hold multiple times. We have increase in the RSI lows over that same time, which actually signals a little bit of divergence. So when you have stable or equal lows in the price action or lower lows in the price action, but the lows on the RSI are going the opposite direction, in this case, increasing, that signals that buyers maybe are starting to step back in a little bit sooner, that selling pressure is abating, and that we might be seeing a bottom formation in the process of forming, and really a confirmation above the weekly 50 here at excuse me, at about 1060 would be confirmation to the upside. So interested to see a break potentially above 1060. Sorry, I got a frog in my throat, guys. Going out to platinum. All right. Platinum, I see heading more to the upside. We did reclaim all of our moving averages, pulled back, found a higher level of support. So we now have an increase in support. We have set a higher pivot high, and we are now trying to break out above that. Anything triggering above yesterday, or excuse me, Friday's candle high, I think is a go. And then we would likely be targeting target 1 up to 1075, target 2 up to 1100. Going out to the Russell. The Russell is interesting to me right now, not because there's a trade on it currently, but because I think there is potential for a catch-up trade on it in the coming months. And let's back this out a little bit further. We're going to put this on a 5-year weekly time frame. And you can see here that while the S&P and the Nasdaq are pushing all-time highs, the Russell is falling well short of all-time highs. And a large part of this is just simply due to the nature of small cap versus large cap stocks. So when you have higher Federal Reserve interest rates, it makes it harder for companies to borrow money. If it's harder for companies to borrow money, the companies that have less cash reserves on hand are going to be hit harder by that than large tech companies or other large cap companies that have a lot of capital on hand, that have cash to weather the storm, so to speak. So it makes sense to me that as we get closer and closer to the Federal Reserve potentially starting to loosen monetary policy and cut interest rates, that we might see a catch-up trade with a breakout of this shorter term diagonal resistance, and then a catch-up from there back up towards all-time highs when interest rates start to get lowered. So we are not there yet. This brings us to our FedWatch tool. So we can go out and see for our July 31st meeting that is coming up here at the end of this month. It is widely assumed by the market that we are going to stay at the current rate. But if we go out to September, we actually are pricing in about a 72% chance of a rate cut coming in September. If we go out to November, we are still pricing about a 50% chance that we are going to be at that, but the increased chance goes up to 37% that we might actually get a second cut. Now, I don't think we're actually going to get 2 cuts this year. I think either September or November is going to be our 1 cut for the year. And then in the first quarter of the following year, in 2025, I think is when the fireworks are really going to start, and we're likely to see more rate cuts coming down the pike at that point in time. But for me right now, 1 basis point or 1 cut is my base case. So going back out here, this means we probably have another couple of months until this starts cooking. If we are thinking we're going to start getting rate cuts in September or potentially November meetings, that means we probably have another 3+ months until this is going to be ready to go. So the more consolidation that we get here, the better in the meantime. But I just want to put that on everybody's radar because there is a chance for a really good secondary trade on this as we play catch up, as the Federal Reserve starts to adjust and loosen monetary policy. Popping out to silver real quick, and let's toss this back to a daily chart. Silver, rinse and repeat basically what we had said about gold. We kind of broke out of this little pivot already on silver. Next stop is going back up to the highs on the daily chart. And if we take this and we need to toss this out to a long time frame chart to really see what we are looking at here. Last week, we ended up closing up. The week prior, we had a pause and a little bit of a pullback, and we are just sitting right at the upper end of that zone. And there really isn't anything standing in our way if we can clear above the current highs to get back up to around $35. And even just a $2 or $3 move on silver, especially silver futures, is a significant move. That would be $30-ish thousand gain on a silver contract. Less obviously if you're playing stock or ETF like XL or SLV, excuse me. But again, if we put SLV out to a longer time frame, you can see even on a 5-year weekly chart, we kind of have this big cup, a little flag or handle, and a break above 29 or so should send it higher, probably 32, 32.5, somewhere in there. So nice potential stock trade here as well. Finally, let's go out to UUP, take a look at the dollar. If we put this out to a daily chart, we were pushing highs. We have sold off a little bit. This is actually why I think the market was breaking out last week. When the US dollar weakens a little bit, that is usually bullish for US equities. And if we put this out to a weekly chart, you can see that we kind of came up into the previous resistance from this gap right here before it gapped lower. We filled that gap now, and now we are deciding which way we want to go. It is typical when you have big gaps like this for price to eventually fill that, come back up to the gap line, and then decide where the next step is going to be. So right now it is kind of a fight one way or the other. Don't have a super solid read on it, but I do like the fact that our moving averages are underneath us currently. So we do have a decent amount of support there. Although with that, if we do break down, that would be bullish for equities. So even though the support is there in a bullish manner for US dollar, we actually would like to see it break down. We do have diagonal support right here as well that is going to be testing. So tons and tons of support underneath it. Because this got rejected so swiftly this last week, and that was a significant drop off over the last few days, I'm not super worried about a breakout to the upside in the short term. RSI is coming back down, starting to cross back into bearish territory. So that is supportive of it coming back down as well. And then finally, if we go out, let's look at our economic data coming out for the week ahead. This is going to be for the following week. Let's go back 1 week. There we go. Nothing on Monday, Tuesday, Wednesday, nothing really to worry about. Federal Chair Powell is testifying, but I think everyone pretty much knows his stance and what he's going to say from the last several testimonies that he has given and speeches that he's given in the recent past. So I'm not expecting this to move the market one way or the other very much. Thursday and Friday, however, are stacked. So CPI data and unemployment claims are going to be very, very important to the market. And then Friday, PPI data and consumer sentiment are going to be very important to the market. Of all of these, my guess is unemployment claims and the core PPI data are going to be the two that the market is really going to move on. So those are going to be the two that I am looking to potentially remove some risk going into and or set up some day trades going into. So anyways, guys, as always, hope this helps. Let me know if you have any questions in the comments. Other than that, take care.